Welcome to Futureproof Business. Smart strategies, real insights, and tools to lead and scale in a fast-changing world. Let's future-proof your success.
Welcome to the Futureproof Business Podcast. I'm your host, Dana Rosenstein. Today I have the honor of interviewing Rick Turoczy. Rick, thank you so much for coming on the show today.
Yeah, happy to be here. Thanks for having me.
Can you share a little bit about your background and, who you are, what you do?
Sure, of course. I always like to say I've spent 30 years on, and around startups. So I've worked with venture-funded tech startups, both as an employee and as a founder. For about the past 15 years, I've run a program called PI, the Portland Incubator Experiment, that is really designed to find positive interactions between more established organizations like corporations or government entities or educational institutions and the startup community. And I do the vast majority of my work in Portland, Oregon, on the West Coast of the US, but I also have the opportunity to work with folks all over the world.
I work just. Sorry, my printer started going off like crazy. What was worst time? Yeah, so can you share a whole about how the startup world has shifted, evolved a lot over the years? I remember days when people used to say companies like Google was a startup.
Yes.
Not a startup anymore. What are your thoughts about how it's evolved?
Yeah, it's been an interesting journey. So when I started, we were shipping software on floppy disks and CDs. It was pre-web. And so I've seen it, the whole web thing. And so it went from build this software, make it perfect, then try and give it to somebody to access this software on the web as a service that people can use. And I think the other interesting dynamic has been the infrastructure. So when I started, even in the early web days, you needed enough physical space to house a bunch of servers that were doing the work, and you needed an IT department to work on those servers, and then you needed engineers. You needed a lot of people and a lot of machinery. And as time has gone on, we saw cloud infrastructure become a thing, which meant that suddenly you could have a much smaller team creating equally robust products without the need for massive infrastructure to do that. And then we've seen that leapfrog happen again today with AI, where now individuals or small groups of people are able to do much more by leveraging AI to help them do part of their work. So the startup world has always been a rapidly evolving world, but it's getting faster and faster as time goes on.
I'm sure, especially with technology with AI, everything, the whole world is moving faster than ever.
Right. Yeah, exactly. And it's amazing how I used to marvel at how much a small team could get done in a small period of time. And now it's like a single engineer is building a robust software suite in a weekend with AI. So it's crazy.
So now that you've been in the startup world for such a long time, what do you think is some the biggest myths that people have?
Great question. I think everyone is subject to the startup mythology these days. It's Shark Tank's been on for how many years? Everybody's seen an episode or two of that. And the kind of prevailing myths that people seem to fall prey to are things like keep your idea secret, don't tell anybody about your idea, which is a complete myth. The myth of overnight success, every overnight success you see in the startup world is 5 to 8 years in the making kind of thing. And the idea that a brilliant person with a brilliant idea will easily be successful in the startup world. And while that may at some times be true, more often than not, it's teams of people who are working together to build a really interesting concept or idea that the market actually needs. Not that it's just a good idea or could be a thing, but there are actual end user customers who desperately want that solution that's being built.
Yeah, I'm a big fan of watching Shark Tank, but it makes it seem extremely easy and fast. Somebody just gets on the show, says, hey, I have this idea for either an energy drink or selling some type of product. And someone like Mark Cuban has a good idea. Here's 500,000. And then the person walks out of the room and that's it. You're in 30 minutes. It's done deal. You got your startup money.
Yeah. And it's not like that at all. And the other part of it is I think people get the wrong idea about how those deals are actually structured, because you talk about that and one of the sharks will throw out this number and they're like, I'm going to buy 60% of your company for this much. And that's like, you're undervaluing that company. Like, that's not, don't take that deal. Like you're giving away too much of your company. So there are a lot of things about the startup world that are interesting and compelling, but those seem to be amplified or exaggerated in a very kind of mythological way.
What do you think is like the number one thing that's like startup founders get wrong?
I think the number one thing time and time again I've seen is assuming that A, you need to raise venture capital to build a company, and that B, every good idea just gets funded with venture capital. Like it's really around how the capital flows in the startup ecosystem, and people just not understanding the dynamics of how venture capital actually works. It behooves founders to learn as much as they can about venture capital before deciding even to go down that path, let alone pursuing venture capital. And that's where more people get in trouble more often than anywhere else.
We mentioned like every good idea like gets funded. I've seen some companies, which in my opinion are terrible ideas, how they got funding.
Yeah, that's true too.
How does it like really form? I mean, is it really been looking at the numbers or?
There is, I think the very most like fundamental aspect of it is the job of a venture capitalist is not to fund startups. The job of a venture capitalist is to make more money for the people who have given them money to invest. They need to be working to beat the market, however that upside may occur. So some of those situations where you see maybe a large investment going into something that seems ridiculous is often because that person has made a significant amount of money for venture capitalists before, or they think there's going to be enough kind of hype about that company that it'll drive up the valuation of that company. Venture capitalists are very much basing their decisions on, will this make me more money? And that can sometimes be a good idea, sometimes be a not so good idea, but it's a wholly different estimation from a venture capitalist pursuit, not from a typical business, like, will this generate revenue? Will this generate profit? Those aren't often like primary factors for VCs making decisions.
What do you think is some of the like the non-glamorous realities that a startup like needs to do that most people like really talk about? That's not talked about a lot of the community.
Yeah, I think the least glamorous, like most taxing work that a founder winds up doing is talking about their idea incessantly to both their target market as well as anyone else who will listen. And going through that practice, you get a lot of negative feedback, a lot of no's, a lot of questions about what you're doing. And that can be very taxing for a founder, but it's the grind that you really have to go through. Like building something without talking to anybody about it, or building something based only on your idea of what it should be, is often a recipe for failure. And yet I don't think people actually discuss enough how important socializing the idea is, getting feedback is, and being willing to like hear no a lot of times, but take that objectively as direction for where you should be going with your company or your product.
What do you think is like the most underrated skill the founder should have in 2025?
I think the most underrated skill is objectivity, probably. Many of us, being a former founder myself, like many founders, we fall in love with our idea and think it's the greatest thing and it's going to be successful. And being able to step back and be objective about what's happening in the market, what the product is actually doing, being able to do research objectively and figure out where you should be going and what you should be doing, and not being terribly precious about your idea itself, but being focused on what the actual business opportunity is. Like that's the superpower for good founders.
You've been called like the OG of startup ecosystem building. How do you define like a healthy startup community?
How do I define it?
Yeah.
Yeah.
What's considered to be a healthy startup?
So I think the archetype we're all basing startup communities off of is a San Francisco Bay Area kind of archetype, which has plenty of capital, plenty of people building things, plenty of talent, and as also has like feeder systems from Stanford and other universities in the area, and that's a perfect, complete ecosystem. I think in my world, there's the Bay Area, and then there's practically everywhere else. Like maybe London, New York, maybe Boston, Seattle has a pretty significant, well-formed startup community. But pretty much everybody else, there's a gap somewhere in the system. So some communities, Portland, where I live, is a great example of a lot of founder activity, a lot of talent, but not a lot of accessible capital for people. Other regions I've visited, plenty of capital, but not enough entrepreneurial ideas forming for that capital to invest into. So I think first and foremost, the best startup communities are always led by the founders themselves. There's a great book by Brad Feld called Startup Communities, where he takes people through a thesis about what works for startup communities. But I think it's the most important aspect is it's driven by the founders and the startups, and that other organizations are simply support organizations. They're not really trying to take the lead or dictate the direction. They're more there to play a supporting role to what the founders are trying to accomplish.
What makes like Portland startup scene like unique and different compared to all like other hubs like you mentioned?
Yeah, Portland's interesting. It's over time, especially as the Bay Area has always been a huge startup community, but as Seattle has become a more primary and present startup community as well, we fall in between those two geographically. And so what we wind up having here is a lot of folks who either didn't appreciate either of those communities, but wanted to stay on the West Coast, or they wind up in Portland because they want access to the Bay Area and or Seattle, but they don't want to live there. They want to live somewhere like Portland. And it develops this really interesting dynamic of being a very quiet town in terms of entrepreneurship. I always refer to our primary challenge being aggressive humility. Like people here don't like brag about what they're building. They just do their thing. And they're like, I'm just doing my thing. It's not that big a deal. And then you find out later that person like runs $100 million company and they're not even telling you about it. But it's that kind of dynamic that makes it unique. And then the other aspect of it is Oregon tends to have an awful lot of kind of consumer product focused companies. So Nike is here, obviously. Adidas North American headquarters is here. Columbia, Tillamook, the cheese and dairy company, Dutch Bros, Reese's, which is a salsa and potato salad and stuff company, and as well as hundreds of beer brands and coffee brands and those kind of things. So that tends to be the thing that we have that is most unique is we have this concentration of consumer product knowledge and understanding that isn't really present anywhere else.
That's kind of interesting. Do you think it's easier to get funding in Portland compared to like the Bay Area?
No, like it's much easier, especially for early stage companies the Bay Area has a much better risk tolerance. I would say Portland tends to be a little more risk averse, wants more of a sure thing in terms of investment. So our investors tend to participate a little later than the very earliest stages. So folks usually wind up looking outside of Portland for that initial funding. But once you're building something and growing that company, there tends to be capital here that's available in the way that it might not be in other communities.
You were very successful in building like incredible like networks, like with founders, mentors, investors, corporations. What's like your process for making like all these different connections and making it happen?
I wish I knew. I wish I could tell you. So I think the key to it is like, I never see an opportunity to meet someone as as purely transactional. I see it as an opportunity that's going to occur somewhere in the future that I don't know yet. Like I'm planning for serendipity. So I will meet with a lot of people, not expecting anything to come out of it, just to have that person within my network or for me to be knowledgeable about what they're doing or what they're capable of doing or that kind of thing. And then being patient enough to figure out the time and place that person is valuable to somebody else in my network. And a lot of the work I do is really just connecting dots. Like I don't even necessarily take advantage of what that person I'm meeting with may be offering. I'm more listening for what they could offer to other founders or other people in the network, and really just making sure that those connections happen more efficiently in the community than they would organically. So I'm officially accelerating connections in the community rather than hoping that they occur.
I mean, do you consider yourself extrovert or introvert or somewhere in between?
I'm an introvert, like through and through, which is, it's taken me a long time to build up the courage and skill, like chat with people one-on-one. I still don't do well in groups, but like I'm okay one-on-one now. And I think a lot of that has come just through repetition and practice, but I'm very, very introverted. Like I can't be around like a lot of people for a very long period of time before my batteries start draining completely. Yeah, I'm definitely introverted.
I find it so fascinating because you're so good at making connections, though.
Yeah. Yeah. I wouldn't have chosen this path. It's just one of those things. It's one of those things like I seem to be good at doing it. So like I kind of lean in to that, but I kind of joke, like I was an English major in college and I joke that like, this is plot development. Like I'm capturing characters and making sure that they meet later in chapter 3 so that something amazing happens. It's really just me using that wiring in my brain to do that work. And I'm motivated to continue doing it because of some of the connections I've been able to for people.
So, like, in your point of view, do you think like all startups should be like focused on getting like venture capitalists? Or
No,
no, it's not for everybody.
no, it's not for everybody. It's for it's for a very small percentage of the companies that are being built. I always encourage founders to be figuring out ways to get to revenue faster than VC. It's just a very difficult path to take, even though it seems somehow easier because you're using someone else's money. It's actually more challenging in a variety of ways. The vast majority of founders and people starting companies out there are going to be self-funded through revenue or savings or something else. They're not going to be funded by venture capital. And so I always encourage people to be like really honest with themselves about that they may not be building a company that is VC backable. They need to be prepared for that.
Do you think it's tougher now to get funding than it was maybe like 20 years ago, 30 years ago?
I think it's always tough.
Oh, it's been
Like
tough.
it's always tough in a different way. Like now, so like during the pandemic, everybody was flush with cash and was like doing a pretty good job of spreading that capital around, but then it became harder for that next round of funding. So while you could have gotten early stage, the Series A or Series B became more challenging. These days, people are being a little more careful about their initial investment. And then because of that, companies are having to generate revenue and take on investment, but that results in them needing less follow-on capital because they're already finding ways to get to revenue. So then it becomes challenging for the VCs because they're like, how do I deploy more capital if you're not raising more capital? And so there's always some weird challenges occurring, but I would say it's never easy to raise money. It's always hard in some way. And over the 30 years I've been working in venture funded startups, there's always been something making it difficult.
How do you think like startup founders should decide if they're ready for like investment or just chasing like validation?
Yeah. Yeah. That's a great way to put it. Like it is a lot of people look at venture capital investment as a validation of their idea, whether that idea has potential or not. So that's a really good way to conceptualize it. I think the question founders need to ask themselves is, if that person gives me $1, will I be able to give them $10 back in 3 to 5 years? That's really, is this business going to grow at such an exponential rate that I'm going to increase the value of that investment 10x, 20x over a 3 to 5 year period? If you're not building something that's going to be growing that quickly and becoming on the way to $1 billion company, you're, unfortunately, no matter how great the idea is or how much potential the business has, if it doesn't have that exponential growth, it's not going to be terribly interesting to a venture capitalist. And so you're probably better off to just build the company, bootstrap it, build it on revenue, rather than waste your time trying to pursue venture capital that probably will never come.
What do you say is like maybe some mistakes founders are making when they do like pitch to investors? Have you seen things like, oh, this is like, oh, like the way they're doing it's all wrong, either the way they present or the information or.
Yeah, pitching is it's really challenging. Like, it's kind of like back to the Shark Tank thing. It's set up as this big dramatic, like, reading of the business and what's going on. And more often than not, it's a conversation with an investor. Like, it's very much a back and forth about the potential of what's being built. I think if I see a common mistake, it's that founders get too wrapped up in what they've built or the technology they've used to build something. So they lean into AI is doing X, Y, and Z. And what they really need to be focused on is, this is the market, this is the problem the market is having, and this is the scale of what solving that problem will cause to occur. So like, they need to be focused more on the business dynamics and the potential of that business, and less so with what the particular product does.
So I want to also talk to you about like mentorship, because that's like you mentioned, like really important. How do like founders find a good mentor? And it seems we live in this world with like social media and AI and this like, get on Facebook, LinkedIn, there's like millions and millions of people. First of all, how do you even find a mentor? How do you know if they're any good for something like a fake profile?
Yeah. Well, it's a great question. Like, I often encourage people first to look to other founders. So look for other people who you would consider to be your peers, because they will often be either struggling with things that you're not struggling with. They will have a viewpoint on things that you may not understand. They will be like maybe a step ahead of you, and you're maybe a step ahead of them in other ways. So it can be a very like collegial kind of peer-to-peer mentoring relationship, and founders attract other founders. So that tends to be the easiest first step. And then the next part is look to people in your community every community has people who are building things or who have built something successfully, even if it's not in your specific vertical or like your specific target market. Look to someone who has built something successfully and take the opportunity to reach out to them. I think another way that can be helpful is if you have professional organizations that are focused on entrepreneurship, if you have accelerators or incubators associated with maybe a university setting or otherwise, those can be other really good resources to engage with, where their whole purpose in life is to make sure that founders get the mentorship they need. And so that can be a really easy way to short circuit that process and get introduced to people who want to be mentors, who are looking for opportunities to mentor, and founders who need that mentorship.
I mean, it's not like you've mentored people like all around the world, like for many years. What is to see some like common patterns or even like questions like founders have?
Yeah. I think the most common pattern, the most challenging thing I find myself trying to help founders understand, and it's much easier to say than to do, but it's really trying to help them become more objective and understand that No is just a data point. Yes is just a data point. And trying to help them figure out, don't take the no's so personally. Don't get so excited about the yeses. Like just try and mitigate both of those emotions and help navigate that path into what they're building. I think it's really important that founders socialize their ideas and get as much feedback as possible. But navigating that feedback is often the most challenging thing for founders. And again, not taking it personally, but really taking it as objective feedback on something that they've built. I find myself coaching and mentoring folks on that time and time again. I think the other commonality is people being too precious about their idea and not being willing to either change their concept or not being willing to like try different things in the same area to solve the problem. And the question I always ask founders is, do you want that product to exist, or do you want a business to exist? Because those aren't necessarily compatible. Like you may have to kill that product in order for the business to survive. Are you willing to do that? And if it's a founder who's like, no, I just want this product to exist, then that they may not be on the path to a company or a startup. They may just be on the path to building a product. And there's no saying that every product has to have a business associated with it. Like you can build a product as a hobby and make it do what you want it to do and even generate revenue from it as a hobby. It doesn't necessarily need to be always driven by business or raising capital or those kind of things.
How important is like for founders to have a mentor? Do you find that like startups to have mentors, they're like twice as likely to be successful in any type of startup like that?
I think it serves multiple roles. I don't know how much it necessarily drives to specific business metrics, but it does provide emotional support and does probably help from a mental health perspective. So I think first and foremost, having mentors makes you more resilient as a founder because you feel like there are people in your corner, or you feel like there are people you can talk to or share ideas or compare notes. And I think that's really the important aspect of the journey is having people you can trust that you can share ideas with. And mentorship provides that. More often than not, mentors are really giving you just their opinions on things. It still falls on the founder to make the decision about what the business needs to do, because often the challenge with mentors is they will provide conflicting information. You'll talk to one founder and they're like, oh, you have to absolutely do this. And you'll talk to the next founder. He's like, this is the thing you have to do. And they're like, and then that's exactly the opposite of what the first one said. And then you'll talk to another one and like, they're both wrong. You need to do this. And so you really, as the founder, need to be able to take in a lot of that feedback and mentorship and then distill it down to what you think the business needs to do. But I think mentorship is hugely valuable to folks. It's one of those things, again, from the whole serendipity kind of focus, even if it doesn't pay off for your startup this time around, having that relationship with a mentor will generate value in the long run.
So how important is getting like peer support among founders compared to like traditional like mentorship?
Yeah, I find the peer support to often be more critical, especially in communities where maybe there's not a lot of obvious startup activity or entrepreneurial activity. Just having those other folks who are on the same path as you and largely on at the same stage as you you really can't put a value on it. It's just like it's invaluable to have those folks around you and for you to be around for those folks as well. Like we have a lot of founders who talk, sometimes it's just two founders and they just talk. If anything's going wrong, I know I can call this person and vice versa. And even just that form of connection and support can be hugely beneficial for a founder.
So you mentioned like in the beginning of the show that you created like the pie model. What inspired you to start pie?
Originally, we started out with, it was a group of us who were founders in town who just wanted to be around other people who were actually building stuff. There were a lot of people who were talking about ideas they had or things they were going to do, but there was a smaller subset that was like actually building something, actually pursuing a business concept. And we wanted to be able to spend more time with one another. So we just created a co-working space originally. And then the peer mentorship started to occur organically. And we realized that it was really that more expert mentorship that was missing. And that was at the point where we decided to move it to being more of a startup accelerator program where we could have people who wanted to mentor engage with those startups. And that was really the motivation there was I'd been working in the community 12, 15 years at that point. So I had a lot of people in my network who were very willing to mentor. There was just no infrastructure for them to engage. And so by moving Pi into more of a startup accelerator model, we were able to activate that part of the network as well as support the founders we were trying to support.
So what's been some of the biggest either surprises or breakthroughs you learned from from Pi?
I think I touched on it a little bit before. I think the biggest surprise is how much positive kind of comes out of some of the failures. Like it's one founder I can think of in particular started a company, was in a cohort at Pi. That company failed. He was hired by another company that was in the same cohort as him, helped them build a successful product and successful company. Then he left to start another startup that was then acquired by another Portland company. So we wound up working there for a while. And now he's on to yet another startup. So I think that founder is very, very much a success story. But if you look at that founder at the time that Pi was working with him and his company, it could be deemed a failure. And I think those are the most interesting things, is to see the repercussions or knock-on effect of the community dynamic of engaging with founders and what they learn and where they go from there. The successes of Pi are really far beyond Pi. We'll always take credit for them, kind of like an alma mater where it's like, oh, they graduated from here 40 years ago. That's why they're so successful. But we'll still do that. But it's really nice to see how people continue to grow and succeed beyond our program.
What do you think some of the collaborations between startups and corporations don't work out sometimes?
I think it's misaligned objectives. I think we were lucky in the corporations that we worked with. They didn't have any ulterior motive. They were just like, we want to be around founders. We just want to see how they work, or we want to see what they're working on, or like how they're pursuing problems, or how they're embracing innovation. And they didn't really have any other like motivation. It wasn't like, oh, we want to make a bunch of money, or we need to solve this problem in our business and we're trying to fix that. Or it wasn't really a PR play. Like I think so often established organizations will try and refresh their brand or the public perception of them by engaging in startup or innovation oriented kind of projects when it might not align culturally with the actual business itself. And so more often than not, it's those misaligned objectives. I think if you're a corporation wanting to get involved in the startup community, I think you need to assess why you're doing that and what the motivations are. And if you're a startup or entrepreneurial supporting organization that wants to engage with corporations, you too have to assess like what does success look like out of that relationship. And I think too often it's just like that relationship occurring without any concept of what the outcomes are designed to be. And that causes things to fail because people aren't on the same page about what they're doing.
In your opinion, what do you think like either the government or academic institutions can do better to support like entrepreneurship? Do you think like this, like government should have more programs for entrepreneurs, more government funding, or do you think it should be like more classes? I know there's people can take classes now and like get a degree in business and entrepreneurship. Do you think that in itself is enough, or do you think they should take things and not, should be more classes, like more access? Do you think that should be like a requirement for all schools, like in college, like kind of like English 101 is like a requirement?
Right. Yeah, I think the challenge, so let's start with the educational system. I think the challenge with the educational system is you spend 16, 20 years in that system, and that entire time you are driven to never make a mistake, always get straight A's. And like the entrepreneurial world is all about keep making mistakes, keep figuring out how things don't work so that you can figure out how to succeed. And it's a very much kind of flip-flopping of the way we've been wired through the educational system. So I think if the educational system could incorporate ways that allowed students to experience that failure and ways that were safe and allowed them to explore that failure isn't an end point, it's really a point of learning and growth, that would be hugely valuable. I think on the government side, I think it's less about what they could be doing or what additive things they could be doing, and more about removing barriers. So often there are things like, and not like regulatory, like I think there are reasons to have regulations and those are important, but things like I often see companies that are struggling with like permitting or some governmental aspect or some taxation aspect that while may work for the larger community, it creates an adverse impact on a founder or a startup because of the way the business works. And so like, I often think government can be most helpful in figuring out ways in eliminating or reducing some of those barriers and removing some of those barriers. And that's the way they can most often be helpful, maybe by streamlining systems or making them easier to use. I think governments aren't necessarily bureaucratic and they need to operate in that way. But I think that kind of their end user, the startup, needs something that's definitely not bureaucratic that they can navigate. So I think it's just rethinking how some of the services are delivered rather than adding new services.
And so you mentioned like earlier before that it was tough for startups to get capital from venture capitalists. What about getting like business loans from like banks and those financial institutions? Do you think that's a good route for that founders should consider? You think also they should be cautious about that? Sometimes it's there's always different regulations about how easy or hard it is to get a loan, and the different banks and financial institutions have different. Some are easier, more flexible getting a loan. Do you think that's like a good idea? If I'm starting a business now, go to a bank or some financial institution, get like $100,000 loan so I can have the capital to start. I think that's.
And I think that you always introduce challenges and risk when you're taking money from somebody who's not a direct customer. If you're delivering a service and somebody is paying you for that service, or you're building a product and somebody's buying that product, that's always the best investment. A customer is your best investor. I think bank loans or those types of loans can be very effective for some types of businesses, but it often tends to be one that has some kind of asset that they can insure the loan against. So when you're talking about a web-based business, they don't often have any assets. So it makes that kind of structure an impossibility unless they want to place a personal guarantee and put their house and car on the line for those kind of things. So I don't dislike any form of financing. It's just there's a financial instrument that is right for a certain type of business, and you just need to be aligned with how you're financing the company. But by and large, anytime you're taking money from someone else with the promise of giving them that money back at some point, it gets a little dangerous.
It's definitely rest to that.
Yeah.
Now, I want to also shift the conversation to about, they've done a lot of blogging and storytelling. So you said you've been in the industry for a long time, so almost 20 years. I mean, how does like blogging and storytelling shape your role like in the startup community?
Yeah, it has played a huge role, I think, in a number of ways. One, in that kind of we were discussing like validation, like a founder talking about what they're doing not only raises the visibility of what they're working on, but it provides them with some form of validation and some way of tracking their progress. So that's hugely important. Like I always love when founders start writing on a consistent basis or even talks or whatever on a regular basis so that they can go back and be like, oh, look where I was 3 months ago. I've made a ton of progress. This is great. Like that kind of storytelling is really important. And then I think the type of storytelling I've done, which is more celebrating the work that others are doing, like I think that's important to give people kind of inspiration or kind of aspirational figures. So basically telling stories about heroes that other people would then either choose to emulate or realize that they have the potential to emulate. And I think the more you tell those stories, the more different and varied those stories are, the better it is for the community because hopefully you make more people realize the potential that they have. And I think stories are just a very natural human way of doing that. I think what has been challenging is when I started, I've been blogging since like last century, since you had to like write code to put words on the internet. But like for the past 20 years or so, the blogging I've been focused on is long form content. And that is not the way most people choose to communicate these days. And so I'm finding more interesting stories these days on YouTube or TikTok or through podcasts. It's a lot less written word, maybe short form writing like Twitter or Blue Sky or those kind of things. But it's a changing dynamic around how those stories are being told. And I don't think there's anything wrong with it changing. I think it has become more challenging to follow those stories over time because of the way that the content delivery has changed.
So what do you say to like founders who are like nervous about sharing like the story like online?
I think everybody initially starts that way. I think you're very careful, you're very protective of your idea. The things I try and remind folks is one, if you're not talking about your idea all the time, you're not getting the feedback that you need to improve that idea. You need to be sharing it with more and more people to improve it. And the other factor that a lot of founders don't appreciate until they start telling their story is that then becomes your identity. So what will often happen is as a founder, if you go out and socialize what you're building and you're talking to people about it and you're presenting at events and you're going on podcasts about it, then you become recognized as the person doing that thing. So it almost becomes a defensive posture where if somebody else is discussing a slightly similar idea, they're like, oh, no, that's Daniel's already working on that. You should go talk to Daniel. Like it becomes your thing because you socialize it. So I think that's a very like strategic way of continuing to build your business and continuing to build your identity as a founder. So there are a huge number of positives to putting your story out there and documenting your story. It's very rare for the idea to be stolen or like whatever that people are worried about. Usually, like I'm a good example, like you can tell me all the ideas you have. I don't have any time to steal your idea because I'm busy talking to the next person who also has 1,000 ideas. So it's a lot of it is kind of getting over that self-conscious aspect of it and putting yourself out there and putting the story out there.
Do you have any interesting stories about like your blog that you'd like to share with the audience? Like anything unexpected or different or weird happening?
It is. So when I started my blog, this one in 2007, so it's almost 18 years old, it would be really weird to me when people would come up and be like, hey, I read your blog. I'm like, what are you talking about? And now these days, because what I discovered is that as the readership on the blog was trailing off, people just weren't taking the time to do that. I was like, I should start a podcast. I should start a YouTube channel. I'll just read it to them. And it's like a renaissance of that same behavior. Like people come up to me like, I watch your YouTube channel. And I'm like, what are you talking about? You watch my YouTube channel. So that's always shocking to me. But like, even more so, I've had so many random speaking opportunities where somebody in Germany reaches out and they're like, hey, we saw your blog and would you come speak to this group? Or something like Columbia University reached out to me and they're like, hey, we'd really love to have you come speak at Columbia about entrepreneurship. And I'm like, why? And then we read your blog and we saw you. So it's like those random opportunities that I would have never expected pop up all the time in the most kind of delightful ways. But I'm like, why are you reading my blog? What's going on? Yeah.
That's really interesting. What do you see, when we talked about in the very beginning, how everything's changing so fast and everything, where do you see like the future of startups go?
It's a really messy time right now, I think, in a really nice way. Like, I don't mean messy in a bad way. I think every time there's a significant technological change, people don't quite know what to do and they're fumbling around and they're like, we know it needs to have to do with AI, or we need to like bolt AI on some way. So it's a good time creatively to watch how people are exploring the space. I think in the not too distant future, there are two things I'm super curious about. The first is that we have consistently built things throughout history to be used by other humans. And we're rapidly entering a point in time where we as humans need to be building things that will be used by machines. So it might not be a person that's the end user of my software. It might be an AI agent that's using that software in some way, or it might be a robot that has to use that in some way. So that dynamic is super interesting to me, and I haven't quite got my head around it yet. And then the other thing I think is going to be a drastic change for folks is almost a return to business fundamentals. I think for the past 20 years at least, we have been able to build products that bet on the future because people realized how much effort it took to bring a product to fruition. Like we talked about, as that time is becoming less and less, I think we'll see people being more concerned about the underlying technology and really the benefits and outcomes that solutions are delivering. And that's not necessarily something founders from the last 20 years have been held to. They've been in more of a mode of build it now and figure out the business later. I think that's going to flip back to like, there needs to be a true business with objectives and outcomes associated with it. We're not going to be as patient with businesses that don't have a business model. And that will change the startup world drastically.
So, Rick, if somebody had like questions about our conversation today and they're interested in working with you, what are the best ways they can reach out to you?
Yeah, unfortunately, way back when I chose Turoczy, which is my last name, as my username, and it's nearly impossible to spell. So if you look me up on LinkedIn, is usually the best place to get me these days. That seems to be where the most activity is happening in my world and where I publish most of my content. So that's the best way to reach out to me. I connect with folks all the time, so don't worry about it needing to be a warm intro or that kind of thing. And then other than that, I'm on the internet and any number of weird places on social and stuff. So just feel free to connect with me wherever you happen to be on the internet.
Well, Rick, it's been like really a great talking with you, but unfortunately we're kind of running out of time on our conversation today. Do you have any final thoughts you'd like to share with our audience before we wrap up our conversation?
I think we've touched on some of them. I think it's really important. Share your idea with as many people as you possibly can, as often as you possibly can. And as much as you can, try and be objective about what you're pursuing and what you're building, and you'll be better off in the long run.
Well, Rick, I want to thank you so much for sharing all about your experience and your knowledge. Thank you so much for coming on the show.
Of
I think
course.
you're like an amazing person because you're so involved. And I tried to start up many years ago and I fell flat. I had no idea what I was doing in my startup. And I gave up on it for temporarily, but I'm actually thinking about bringing it back. And
Nice.
this conversation is making me think about even further about bringing it back. It's
Good.
like
I'm
a
glad to
series
hear
of
that.
events. So it's been really interesting. I'm sure the audience will get a lot out of this conversation. So thank you so much for sharing today.
Of course. Thanks for having me.